What is going on, guys? It is said I'm back again with another YouTube video. All right. So in today's YouTube video, we will be talking about how to be, well, not how to be, but why you should be a disciplined trader, the importance of being a disciplined trader, and a key strategy that I use to become a disciplined trader, and what really helped push me a lot more to being a lot more disciplined. Because as you guys know, discipline and consistency are the two most important factors when it comes to your trading performance, right? If you don't have those two, you're never going to make it, all right? Because you have to be consistent with how you take trades. You have to be consistent with your trading psychology. You have to be consistent with your risk management. The more consistent you are, the more disciplined you'll be, the more successful you will be, right? So with that being said, let's get started. Make sure to like the video, comment down below any other YouTube videos you want me to make, and subscribe to the channel. So we're going to start off by first reviewing two trading setups I took yesterday. Yesterday was a great day for me trading, mashallah. Alhamdulillah, I made 1.5 hour, 2 winning trades. So let's break them down. So we go to the 1 hour chart real quick. I don't know why I went all the way to July 13th. Okay, and now we are trading over here. So very quickly, if you go to the 1 hour chart, what do you see? Easily it's spotted that there was this downtrend line that had been broken. So this downtrend line was broken and retested. Now, when you look at market structure, right, again, because market structure helps us with figuring out the trend, right? So we had a lower low, lower high, lower low, lower high, lower low. Now we break and close above the last lower high. So now this is a higher high, and now we're looking to make it in a higher low. So this higher low doesn't get confirmed until we break and close above this higher high, right? But because of the fact that we had broken past this previous lower high, and now we made a higher high, and we retested, I saw multiple wick rejections and a strong bullish momentum starting to emerge from the bounce of the trend line. I believe that we would start to continue with bullish momentum and flip bullish. So with that being said, I went back down to my 15-minute time frame because I saw my overall trend was bullish, right? It might look very choppy right now, but the overall trend is bullish. Now, that being said, what I see is very, very strong key level right over here. Okay, and what you can tell actually is that there was also this trend line. And what you see here, guys, if you can notice, is that these variables were not actually supporting my trade as much, right? If you look at the support level, price had actually closed below the support level, broken and closed below the support level, and the trend line, it was actually closed below the trend line, right? So what I did is I decided to remove the trend line simply because I don't necessarily like trading with trend lines. I think it's very easy to, they're very subjective, and it's very easy to mess up how you form the trend lines. And so I decided that I'm not going to trade with trend lines. They're usually used as a supporting factor for me, but they're not an end or be all for me. The main thing that I was looking at was the support level. We had closed below the support level that I just marked up, right? Closed below the support level. But what I had noticed is that right at that support level, we have been here a lot, right? If you look over here, it had been a very, very reactive level. Like continuously, there was strong and very volatile movements from this level. Price does not like to be here for a very long period of time. As soon as it comes back, bam, very strong movements, right? So when I saw that price had been here since the last, I want to say, hour or so, I saw that there was something wrong and something was about to happen. So what I did is that I saw that there was divergence and I took a buy setup because I was thinking, I don't really trade this type of way, guys. I don't really trade liquidity hunts and everything, but what I did see is that this is a very obvious level. And so if the market makers were trying to push out and take out the stops, they would have done that as this support level has been very respected in the past. So all the people's stops would be below this support level. And I just took these out and then I saw divergence. And so I entered right off the divergence confirmation and I won that trade. Now, very, very important thing to notice. I want you guys to note that price actually ended up going in my favor and then closing below where my entry was. So it actually did end up going against me, but first it was going with me, right? It was going in my favor, but then it went against me. So that's very important, and we will mention that again later on in the video. But right now, let's get to the second trade. So second trade setup, again, very, very similar. Where was it? Ah, yes, over here. Again, very simply, I noticed that this trend line was broke. Again, I don't like to use trend lines unless if they're simply for trends. I don't like to use them as ways of support or resistance. They're simply just for me to easily identify what's happening with trends. Now, on this 1 hour time frame, you can easily see that this was a key level. I mean, I could continue going back and yeah, very, very strong key level, right? Go back down to the 15 minutes and I checked to refine the key level, honestly, and there was no refinements really needed to be done. So I was like, okay, maybe potentially I actually could have moved this a little bit smaller over here. There. So now I go back to the 5-minute time frame, which is my entry time frame. Okay. And now if you notice that this same exact scenario ended up happening as it did in the first setup, right? We see that this was a very strong key level and price ends up actually closing above, breaks and closes above the key level, and then gives me divergence on the MACD. And so I, again, thought that this was going to be a liquidity hunt potentially, because again, this was a very strong key level that's been tested in the past. And so people are obviously going to put their stop losses above here for if they're looking to sell. And there was very strong indications of sells. So that would likely be what majority of people do. So I would assume that market rate groups will come back to hunt their stop losses and then push price in my direction. So that's why when I saw the divergence setup happen right over here, again, you can see price making higher highs, but the MACD making lower lows. Once I get the confirmed divergence in the MACD of this bearish pinball and the histogram for being bearish, I entered this trade and I closed out break even. Now, what I want to mention to you guys is that when you see setups like this, you can only have winning setups if you're ready to accept the losers, right? You have not earned the right to win. You have not earned the right to make money unless if you have disciplined yourself enough to feel the sting of losing. And losing hurts. Losing sucks. I know, guys. Listen, we as humans have ego. We as humans have greed. We as humans want to be right. Okay, and we want to protect what's ours. And when you lose trades, not only are you not right, so it's hurting your ego, but also you're not protecting what's yours. Your capital, right? You want to continuously increase your capital, but now you're losing capital. You're losing money. You're not protecting what's yours, so that it really hurts to lose. But if you want to be able to make winning trades, you have to be able to accept the losers. So I'm going to talk about what I do in order to help myself with this and not close out trades early, because guess what, guys? If I saw when price was pushing in my favor and started going against me, if I closed that trade out early, or I closed it out break even when I wasn't supposed to, what would have happened? I would have missed out on actually hitting take profit. And you have to hold your trades to take profit, because I know for a fact you guys are holding your trades to stop loss. So if you're holding your trades to stop loss, but you're not holding your trades to take profit, you're going to be a losing trader. It's as simple as that, guys. I know it sucks. I know you want your ego to be fed and you want to have a big head and so like, oh, look at me, I'm a winning trader, right? But stop closing your trades out early. If you're letting your stop losses get hit, you have to let your take profits get hit. Right? If I was to be like what a beginner would trader would do and see price going in my favor, get all excited, get all happy, and get all giddy, and then price starts reversing, so I close it early, and I only took home like, I don't know, 6 pips or something, then guess what? I would have lost out on triple the amount of pips simply because of the fact that I was too scared and I couldn't hold my trades. So in order to avoid doing, and I know what you guys are thinking, right? I know what you guys are thinking. Well, if in this scenario, right, if you saw price was going against you and then you took, you closed the trade early, then you would have made some money instead of losing some money. That's right. But when would you have closed the trade? You probably would have closed it at this candle right here, right? This candle probably would have gotten you like not less than half hour on a trade, right? So if you did the same thing over here, right, you've probably banked like 0.8 or 0.75 or just off this one trade, I banked double that. I made 1.5 hour. So you could have had either 2 winning trades where you made money on both of them, or you could have 1 break even and 1 winning trade where you let the take profits get hit, or you let your stop loss get hit. My take profit got hit on this, my stop loss got hit on that. The only difference was that my stop loss was break even, so I didn't end up losing any money. Again, I had to let my stop loss get hit over here. Oh no, this was the first trade I took. So because of the fact that I let my take profit get hit, I also had to let my stop loss get hit. And it's as simple as that. That's what you have to remember, right? And vice versa. Because your stop losses get hit, you have to let your take profits hit. Now, the strategy I use in order to really help myself with this is that as soon as I take a trade, As soon as I marked out my stop loss, my take profit, I go over here, I set an alert, and let's say that's like where I want to move my price to break even. Oh, my bad. Okay. Oh, prices. Oh yeah, price is right over here today as well. That's why I didn't even notice that. But as soon as I have my trades, all right, let's say the alert was over here, right? And let's say I'm targeting like this much. So as soon as price hits this, as soon as I set my alert, I'm going to walk away from my computer. Okay, I'm going to, if I'm continually trading, right? If this is the first trade of the day and I'm looking for a second trade, which is what happened in this session, I was trading, then what I'm going to do is I'm just not going to check it. I'm going to delete the chart from my watch list. I'm going to delete EuroCAD in this scenario from my watch list. And the reason I'm going to do that is because I completely forget about it. And if I forget about it, I'm not going to make mistakes. I'm not going to go against my trading plan. I'm not going to close early. I'm not going to close at break even when I shouldn't. I'm going to let either my stop loss get hit or my take profit get hit. Right? This is a strategy that FXAlexG uses. You guys probably know of him. He's very big in the trading industry, friends with Leonard Burrell and a lot of the higher ups in terms of trading gurus. He's a very legitimate guy. I really like him. I text him sometimes on Instagram, and he always makes sure to reply and he gives really good advice. So if you're not following him, please follow him. I do give him credit for this term, and that is setting and forgetting. As soon as you set your trade, enter the trade, set your stop loss, set your take profit, and forget about it. And if your strategy entails that you should move your stop loss to break even, then have an alert set for it, and do not check it again until TradingView on your phone notifies you that your alert for price reaching this price point has been hit. So you should move your stop loss to break even. It is as simple as that, guys. Okay. Set the trade, forget the trade. I did on this trade, and then I did on the other trade, and it's as simple as that. And I did it today as well, and I'll do it tomorrow as well. And this has really helped me stay disciplined, become a better trader, and start making money as a trader. So I sincerely urge you guys to set and forget all your trading setups. As simple as that, guys. Please heed my warning and do as I say, because I know what I'm talking about. I've been in this industry for 3 years. So please set and forget your trades. As Alex Gonzalez says, FXAlexG, I think his last name is Gonzalez. I might be wrong. But FXAlexG says, right, he's the one who I got this term from. He's the one who influenced me to actually start using this. And it's really helped me and excel my trading. So please, I urge you guys to do it as well. That's about it for me, guys. Make sure to like the video, comment down below if you're going to try this, and subscribe to the channel. Peace out, guys.